From downtown Milwaukee, welcome to Money Talk with Bob Landis. Each week, professional advisors from Landis & Company Investments discuss the latest financial developments, offering timely insight and long-term perspective.
This is Money Talk for October 17th, 2025. Let's see what's happening. The Brewers are up against it tonight in a do-or-die game with the Dodgers, but your Milwaukee Bucks are back. They opened the season Wednesday with the Washington Wizards at Fiserv. Well, Gallery Night is also back this Friday and Saturday. That'll be a fun time. Now, if you're a craft beer lover, this is your weekend. 19 local craft breweries are serving up their beers, and they're all leaning into the Halloween theme. Could be fun. Okay, let's start on a small island of Cyprus in the Mediterranean. It's just lousy with cats. 1 million humans live there as well as 1.2 million cats. It's an island, so they can't run away. So to keep themselves busy, the cats make more kittens. The environmental commissioner noted their sterilization program only fixes 2,000 cats annually. You don't need to be Einstein to know that math just doesn't work. Pietro Komodos, a Nassau County, New York legislator, went for a late-night swim in the ocean and never came back. Then there's an election coming this fall, too. So as the election nears, voters on the south shore of Long Island have a curious choice to make, which is re-elect the Republican incumbent or the Democrat who vanished at sea. And the polls are calling it a toss-up. Wonder how the incumbent feels about that. And let's wrap this up with a Chinese newspaper headline. 82-year-old Chinese woman was hospitalized after swallowing 8 live frogs. She did it to help ease her persistent back pain. Now her back doesn't creak anymore, it groans and croaks. We'll give you time to groan for that. On the podcast today, we have Tom Pappenfus, Joel Dresing, and wrapping up the week, here's Kyle Tetting.
Well, thanks, Max. A pretty decent week overall for markets, despite some more shutdown uncertainty and trade uncertainty. The NASDAQ up 2.1% this week. That's 476 points. The S&P 500 up 1.7%, 111 points this week to close at 6,664. And the Dow Jones Industrial Average added 238 points on Friday to finish the week up 711. That's 1.6%. Closing at the bell at 46,191 for the year. NASDAQ up 18, the S&P up 14.4, and the Dow Jones Industrial Average up 1. Joel, I think the challenge we continue to face in trying to put on a podcast week to week is that so much of what we normally like to talk about, what's going on with the economy, what's going on kind of especially in our country broadly, well, it seems to be a pretty big black box right now. I was taking a peek at your list of economic data points this week. Not a thing on the list that actually got reported.
Very consistent. Not available, not available, not available. Yeah, and the big question is, we're all in a tither about the Fed and what it's going to be doing with interest rates, and we've heard from them consistently for years that they're data-driven. Well, they're not getting the data that they need to make the decisions that are important on whether to keep lowering interest rates and by how much and for how long. And then, and we talked about this earlier in the day, there actually was a Fed report today, and even though the federal government isn't operating, the Federal Reserve Board still is ongoing, and they had a report that was due out today, so I thought that at least we would get numbers on industrial production and capacity utilization. But lo and behold, they issued a little statement that said, no, we rely on other data to put these numbers out, and that data is not available.
Yeah, at least in this case, we know what we don't know, right? We know what we're supposed to be getting. We know what's not coming because of this shutdown, and so I think it's pretty easy to kind of, hopefully, once we get some of these reports coming in again, be able to retake stock of kind of where we are.
In the meantime, we have to rely on less reliable information. So the Fed puts out a beige book about 8 times a year, and they just came out with one this week. And so we rely on that more for a look at what's going on in the economy. The beige book basically is anecdotal information that the Fed collects from different active people in the economy, businesses, consumers, so on, in the 12 different regions in the country. The report showed that 3 of the regions saw a slight increase in business activity in the 6 weeks that ended October 6th. 5 regions saw little to no movement, and 4 it was lower. They saw things getting slower. Overall, they saw that the things that we have been talking about up until this point, where the consumer spending was slowing down, that was getting muddier, and the big thing is labor market. That there are more, mostly in the regions there were reports of lower head counts. So a lot of businesses are just not hiring right now. They're less certain about what they're going to be doing because of various things in the economy, and so they're just hesitant to hire.
And Tom, meanwhile, we're getting forecasts and projections from the entities and individuals that at least are still working. The Wall Street Journal doing a survey of economists in the immediate aftermath of the shutdown, so kind of the first week or so of November. Those economists forecasting somewhat strong growth looking kind of through the end of this year and into early next year. Certainly much more stable than maybe what we otherwise would have expected. But at the same time, some slowdown in the labor market. We got other forecasts from the IMF on kind of what global growth looks like. What are you seeing? What are you kind of reading right now?
Yeah, coming across IMF reports, what their expectation for GDP growth in 2025 is they're revising their estimates and forecasts upward. So in spite of all the uncertainty, in spite of kind of renewed global trade tensions, and really kind of the entire world just kind of waiting to see how this continues to play out, and really kind of at the mercy of everything that's happening, expecting 3.2% global growth in 2025. That's revised upward from 3%. And even an earlier, lower forecast back in April of 2.8. So, that's encouraging. I mean, I think it goes to kind of a theme we've talked about, that the government may have been, shutting down, but it doesn't mean that businesses aren't open and that people aren't spending. So as it relates to a little less, topical points to address specifically, we can kind of look to, some of these forecasts go to, private sources of information and data. They're also looking at, U.S. or more domestic growth, and a little bit less than that, generally speaking. But again, they're revising their forecast upward from not quite as much, but from 1.9 to 2%. More recently, and forecasting ultimately about 2.1% GDP growth in 2026. So, in spite of a lot of the uncertainty, there's still signs that we're moving along and businesses are doing okay right now.
Yeah, interesting that IMF report pointing to global growth as strong as it is, and certainly a little bit stronger globally than what we anticipate here in the U.S. I think that's largely in line with what we've been talking about, that there are a lot of really good opportunities as you look at the rest of the world. And the challenge in saying that, of course, is that when we look at GDP growth, that's not the same as earnings growth. It's not the same as what's happening with businesses. And so, I think it's been far easier, especially now that we're into third quarter earnings season, here in the U.S. at least, to kind of go, well, here's what we're seeing from businesses. And I've always kind of put a lot more emphasis on, are businesses making money? Are they profitable? We're seeing another strong quarter for earnings. A lot of financials reporting so far, but financials kind of a pretty good indicator for overall economic activity. How much have you been paying attention to the earnings report so far, and kind of what are you seeing, Tom, in terms of just kind of expectations for growth?
Yeah, like you said, we're just kind of kicking off the start of earnings season here, and it looks like data coming in is at about 78% of these companies are beating their forecasted earnings estimates so far. So I think, next week, I think, is looking at a bigger kind of tech rollout of earnings. So more to be expected then, especially considering that so much spending has happened in AI and the technology space. Naturally, 40% of our, S&P 500 on a market cap weighted basis is really driven, performance-wise, driven by some of these real tech-strong names. So obviously we're going to be paying close attention to that. And recently, as we've seen the returns from the S&P this year, about 60% of the returns over the last just few months have come from just 7 names. So again, they continue to play, especially in this rally that we've continued to see really a market trickle up. They've had a strong influence on that. And, naturally, as we kind of, look to this calendar period time of year, we start to wonder if, when funds and other institutions may start to do a little bit of what we call window dressing. Do people start to sell, capture some gains? So it's something that we kind of monitor to see if there might be a little bit of pullback. Market valuations, PE now on the S&P 500 has largely been pretty stable for the last several months. It's at about 22.5 times future earnings. But nonetheless, anytime it gets to that 22 level, I think a lot of people start to get a little skittish, start to look for some other opportunities, and just really kind of hedge their bets a bit. And so it remains to be seen, as we're seeing a little bit of selling in the markets here of late, especially with Friday, with kind of the new trade, kind of renewed trade, issues with China and market selling off. Then it's been kind of an interesting week so far. If that continues, and if we see any more people kind of selling to kind of capture some of those gains before it gets a little bit.
Tom, I know you've talked in the past about the breadth of the market and how 7 companies generating 60% of the earnings. Is that concerning? Is that something that might lead to something else?
Yeah, it's is it concerning? Is maybe a strong word, but it's definitely something people pay attention to because wider market breadth, and really the definition of that just meaning more companies participating or being a driver of performance and growth. If we don't have that, it tends to lead to, less trust in how much further this market can continue before we do see a pullback. And so right now, market breadth is fairly narrow. We're looking at just under 40% of the S&P 500 companies are trading above their 50-day moving average. So we're almost kind of getting into technical analysis with some of these measures. Naturally less important to us, but really important to what you see on a day-to-day or week-to-week basis for where the markets are moving. And we're starting to see some of these signals that the market's petering out a little bit right now. It's stalling a little bit. Like I said, it doesn't mean that it has to go down. It just means that we're sideways for the time being until we get perhaps a catalyst one way or the other to push us in another direction.
Yeah, sideways trading on an S&P up 14.5, including dividends this year, maybe wouldn't be the end of the world. I think one of the benefits we have seen from especially the recent earnings reports is that they have really allowed the market to catch up to some of those records we'd been setting for the S&P. And so you mentioned, Tom, a 22.5 times forward earnings, price to earnings multiple. Well, okay, if we had just let stocks continue to run the way they have and hadn't seen the earnings growth come along with it, we'd be talking about stocks that are much more expensive right now than that. The other thing that I think has helped is that as interest rates have come down, it's made the stock market a little more attractive again relative to some of the alternatives. And so a 10-year treasury right now right around 4%. Well, all of a sudden the earnings yield of, on a forward earnings multiple of 22.5 at 4.5%, all of a sudden stocks look, okay, not quite as expensive as they were. Still certainly an expensive market, still certainly things that investors should be cognizant of. But I think there are some opportunities out there for those willing to hold things longer term. Joel, the last thing on my list today is just to touch on something we've been talking about with respect to the cost of living adjustment expectations for Social Security. Still don't have clarity necessarily on when the announcement is going to be made, but we are going to get a CPI report for the month of September. Released on October 24th, and then Social Security Administration has until November 1st to make that announcement on what to expect.
So, Kyle, usually when the Bureau of Labor Statistics releases that September CPI report, Social Security will do their calculations, and almost right away they'll issue what the cost of living adjustment will be for the next year. So I would suspect that that's probably going to happen on October 24th, probably 8:30 Eastern Time, 7:30 Central Time. A little after that, you probably should know what Social Security is going to do with their benefits checks next year.
It is a formula, so hopefully there's enough people working at the SSA to be able to pin that down. Expectations right now for somewhere between a 2.7 and 2.8% increase for Social Security benefits next year, so might be a nice little bump, and coming at a time in which I think there's been a lot of consternation over especially Medicare supplement, and any number of other kind of related costs. And so be a nice little bump for seniors that are kind of looking at, okay, what is my spending going to look like going into 2026?
Sure, it's very important for trying to figure out what your monthly expenses are going to be and how you can cover them.
With that, we enjoy doing the program for you. We'll talk to you again next week.
Thank you for listening to Money Talk with Bob Landis. If you have a financial question you want answered on next week's show, email it to moneytalk@landis.com. To keep informed throughout the week, visit our Money Talk page at landis.com.